In today's video, I'm going to give an updated analysis on Hershey stock, which is a company many of you have been buying in our community. The stock price is down from a high of $276 all the way down to $182. This gives it a starting dividend yield of 3.01%. And historically, Hershey is a dividend growth machine. In the past year alone, they have had multiple 15% dividend increases. So why is the stock fallen, and will it continue this high dividend growth into the future? We're going to be answering those questions and more in this video. But before we get to that, let's roll the intro. My name is Zach, this is Dividend Data, and you should leave a like and subscribe to the channel if you enjoy the video. Throughout, I'll be using my stock research tool, dividenddata.com. I made this to display all the various financial statistics I look at when analyzing a stock. We currently have an exclusive summer sale, which is going to last through July 4th weekend, so get it while it lasts. You can get 50% off both the monthly and annual plan and lock in that price for life. Use the promo code SUMMER at checkout, SUMMER. But let's dive into Hershey. First, let's explain a little bit about their business. Now, I really would be surprised if you had not heard of many of the brands that Hershey owns. They pretty much dominate the snack and dessert aisle at most grocery stores and convenience store chains. You know, they have Hershey, Reese's, Kit Kat, Payday, Pirate's Booty, Almond Joy, Jolly Rancher, Skinny Pop, Twizzlers, Icebreakers, whatchamacallit, Whoppers, York Patties, Hershey Kisses, Heath Bars, Good and Plenty, Milk Duds, Mounds. Really, the list just keeps going on and on and on. So their three main business segments are North American Confectionery, which is their chocolates, and that's many of their top brands like Reese's, Hershey's, Kit Kat, etc. And then you have North American Salty Snacks, which are some of their other acquisitions. You could throw Pirate's Booty in that category. And then international, that would be things like Cadbury, I would assume, and other international names. And in order of prominence, this is about $8.5 billion. And then both of these are around $800 million or $1 billion in total revenue annually. So the chocolate business really is the main business here. And the interesting thing is it's still the main growth driver of the company too. So it's the biggest business and the highest growing one. All right, so here we have Hershey stock. The current price is $182. Trailing 12 months earnings per share was $10.10. That's an 18 PE ratio. So for a high quality company like Hershey, that's actually a relatively cheap PE. And as I said earlier, a 3% dividend yield. Company is valued at $36.8 billion. I closed that tab down over here so you guys can get a better view. Earnings per share have steadily grown with actually accelerated earnings growth since 2020 about. Revenue per share has grown at a 5.52% 10-year compound annual growth rate. This has accelerated in the past 3 years to 11.73%, and top-line revenue growth does continue to this day. And this is a pretty high-margin business in consumer packaged goods. They have 45% gross margins and 16.68% net margins. That's for fiscal 2023. This is not up there with Coca-Cola. Coca-Cola is a higher margin consumer packaged goods business. That's because they're highly concentrated in their main product, which is crazy high margin. And then a step down from that will be PepsiCo because they're more diversified. I would throw Hershey more into that PepsiCo category. They own great brands, but that in terms of comparables, this is like the chocolate snack version of them. Net income per share is growing at a 9.53% 10-year compound annual growth rate. Again, it's accelerated over the past 3 years to 14.02%. And this has been very impressive growth. Free cash flow per share growing at a 7.33% 10-year compound annual growth rate. 7.9% over the past 3 years, so slower growth here. And they actually declined during 2023 compared to 2022 in terms of free cash flow. That was a 13% drop. And so far in Q1, their comparables are even down from 2023. Their Q1 to Q1. Q2 earnings for Hershey is going to be in July, so maybe I'll do an update video depending on the results there. Shareholder equity continues to grow in the company. Net debt is at all-time highs for them, but they are not struggling from a cash flow perspective overall. So for example, their total debt is up to $5.6 billion. They have $520 million in current cash on hand. However, annually, the company is raking in about $1.5 billion in free cash flow with $2.3 billion of operating cash flow. So they do generate a large amount of cash, and I wouldn't say the debt is a problem for them at this point. And with this cash flow, they have been paying a fast-growing dividend. 10-year compound annual growth rate of the dividend is 10.94%, which is very good. And the past 3 years, they've increased the dividend at a 19.44% 3-year CAGR. And as I was saying earlier, their last increase was 14.93%, and prior to that, 15%. And that was all during 1 year period. And as an investor, I am partially concerned that perhaps they grew it at too fast of a rate. So for example, previously they would only increase their dividend once per year, and usually not even at the 15% rate. That was newer growth levels. So they did increase it at 15% in 2022 and 12% in 2021. But prior to that is around 4%, 7%, 10%, 6%, 6%, 8%, 10%. So two 15% increases in 1 year is, in my opinion, getting a little ahead of themselves, especially when you consider that during fiscal 2023, their free cash flow actually declined that year. But this is not putting them in financial harm in any way as a company, because you can tell from their free cash flow based payout ratio that it's still only 57% based on fiscal 2023. So my 2024 payout ratio prediction, just eyeballing it, I think it would be closer to 65% with this increase. And based on net income, the payout ratio for fiscal 2023 was 47%. So the company is financially healthy. And when you compare it to something like PepsiCo and Coca-Cola, which are very mature dividend payers, they have around 80% payout ratios. Hershey has a lot of room to grow and reinvest in their business compared to those companies, which in terms of high quality dividend payers, those really are the only comparables, Coca-Cola and PepsiCo. You can maybe throw Procter & Gamble in there, but they're not in the food category. And if we look at the historic dividend yield here, they have not been over a 3% dividend since 2018. So this could be one of the better long-term buying opportunities from a dividend yield perspective on the company. And if you are someone who's close to retirement and will be counting on this dividend income in terms of reliability and mid to high dividend growth annually, it's hard to come up with better options than Hershey right now, in my opinion, which is why a lot of you have been buying it in our community. You know, a 3% dividend yield, and I don't think they'll continue the 15% dividend growth, but if they did, you're not going to see better options than that with a starting yield. And aside from the dividend payment, they do buy back shares every single year pretty much, at about 0.5% a year, and this adds to your shareholder return as an investor. This is a company with good return on capital employed. They're regularly buying companies for acquisitions, new brands to add to their portfolio. And in terms of the stock, Hershey is a well-run business. Very little complaints in that regard. I definitely think they have an economic moat around their business, especially with those top brands. Reese's, you're not going to compete with in general. That's a killer in the market. So if we dive into their Q1 report, which is actually data from March, although it was reported at the end of May. Again, Q2 will be coming out in July. That will be released. So their North American confectionery business, which is the chocolate one, 10% growth year over year. And that comes 5.9% from price increases and 4.5% from volume increases. So again, their biggest business is growing the fastest, which is a great sign in a company. Salty snacks, that's 1.9% growth, 1.7% from price increases, 0.2% from volume. And their international business, which is the smallest business, is 1.8% growth year over year, 3.5% from price increases. And there's actually a 4.8% volume decline there. And this is top line revenue growth, by the way. And for the company, here's their 2024 full year financial outlook. They're expecting net sales growth of 2 to 3% and 0% for both earnings per share growth, non-GAAP and GAAP. And that's basically what they're on pace for so far based on what I was looking at in the stock data. They're expecting capital expenditures of $600 to $650 million, which is pretty similar to prior years. That's about what they've been doing. And they say that that is mostly going towards investing in their core confection capacity expansion and digital infrastructure. So they're expecting GAAP earnings of $9 to $9.11 per share and adjusted EPS to be flat at $9.59. So it'll be interesting if they update this any farther during their Q2, but they definitely set the bar low. And when they released this report, you see the stock goes from $276 all the way down to the current price of $182. And it's pretty obvious why. I'm sure the market was not expecting that low of guidance for the full year. However, since we've had this large price movement down, if you're bullish on the company long term and think they have good assets, then this could be a great buying opportunity, especially since they already set the bar low and we're already about halfway through 2024. So if they're projecting growth in 2025, then we're already part of the way through that movement. So during the end of 2024, the stock might already be moving up, expecting those future gains. And in terms of a business analysis, there I see very low risk, and they have such a dominant position in their category. The only real risks I see are people like Mr. Beast's new company, Feastables. That is a new competitor in the market that's actually taking shelf space, especially at Walmart and other stores. And I would not want to compete with Mr. Beast in any way. This dude works like an animal. He's fantastic. Highly innovative. This chocolate company will be huge. Hershey should probably try and acquire this in the next couple of years, or else they're going to be acquiring it for $10 billion like 10 years down the line. So there's always the risk of competition. But even these things, I think it kind of just grows the chocolate market because Mr. Beast is bringing his large audience towards stores. So it's people who maybe weren't buying chocolate anyways. It's kind of new sales. I mean, the idea that you're going to drive Reese's or any of these other extremely valuable brands out of the market is pretty ridiculous, to be honest. New competition isn't always the best thing, but I think their moat's strong enough that they'll be completely fine. So anyway, that's my updated stock analysis on Hershey. I am a little bit concerned about future dividend growth here. I think this double 15% will not happen again anytime soon. And I could see dividend growth not happening again for about a year. And maybe it would only be at 5%, maybe 8 to 10% at that time. But that does depend on their business performance. I should also mention that another reason for the stock price going down is cocoa prices booming over the past year about. They've basically tripled in that time, peaked in April 2024 and have fallen back down, but are still historically high at this range right now. And by historically high, this is still like 3 times the historic levels just as of 2022 or 2021 for cocoa prices. And again, this is a chocolate company, so this is one of their core expenses in making chocolate. So far, we haven't seen that reflected in their margins, and they actually had all-time best margins in gross margins, operating margins, and net margins in Q1. But a lot of that cocoa price action was in Q2, not Q1. So this is one of the negative factors at work driving down Hershey's stock. And again, those cocoa price highs, the stock price has pretty much declined since then. Anyway, I hope you enjoyed this video. Please subscribe to the channel if you want to see more stock analysis and dividend stock news. I hope you liked this bonus video on Sunday. And again, if you want to use this stock research tool, then sign up at dividenddata.com. You can get 50% off both the monthly and annual plan if you use the promo code SUMMER. However, redeem it fast because it's only lasting through July 4th weekend, and then the sale is over. You can lock in that price for life, and thanks for watching. See you later.